So you wake up, check your phone, and see the headlines. A bank just collapsed. And immediately you have that cold feeling in your stomach. Is my money gone? Do I need to run to the ATM right now and stuff cash into my mattress like a paranoid squirrel? Welcome back to my channel, where you are confused and we are confirmed. Today, we are answering the scary question, when a bank fails, where does your money actually go? And why does it usually end up as a Tesla driving down the highway? Let's break it down. First, what exactly is a bank collapse? In simple terms, a bank collapses when it has used up every single lifeline, sold every asset, called every favor, and it still cannot pay back the money it owes to depositors like you. It's rare, but it happens. We saw it with Lehman Brothers in 2008, which basically broke the entire world economy. And we saw it recently with Silicon Valley Bank, which scared the living daylights out of every tech startup in California. Here's the million-dollar question. When the bank doors lock, does the money inside just evaporate? To understand the nightmare, you have to look at the magic trick banks use every day. I actually broke down this entire money-making machine in the video linked right here in the corner. It exposes exactly how banks rake in trillions of dollars. But today, we're looking at the flaw in that machine. We like to imagine a bank is a vault. You put $10,000 in, they lock it in a box, and it sits there. It doesn't. The moment you deposit that $10,000, the bank keeps maybe $1,000 in the vault. The other $9,000, they lend it to a guy named Dave. Dave takes your money and buys a used Tesla from Mike. So, look at the bank's vault. Is your $10,000 there? No. Your money is currently a metallic blue sedan driving down Highway 101. This works great until everyone wants their money back at the exact same time. The bank says, I can't pay you. Your money is a car door. That is a bank run. And when the bank can't sell that car fast enough, the doors lock, bankruptcy begins. So the bank files for bankruptcy, the court steps in. They sell everything, the desks, the computers, the logo, and even Dave's debt. Who gets paid first? You might think, me, it's my deposit. That's cute, but no. Here's the brutal truth of the priority list. To begin with, bankruptcy costs. The lawyers and the court, they always eat first. Next, the staff, salaries and insurance for the employees. Then, the landlord, the rent for the building. Finally, you, the depositor. You're way down here. You get the crumbs. Now, you do have one safety net, deposit insurance like the FDIC. Basically, the government promises to pay you back, usually up to $250,000 because the bank gave your cash to Dave. So, small depositors are usually safe. But for the borrowers, if the bank dies, is my student loan free? Do I still have to pay my mortgage? Yes. Your deposit is a liability, but your loan is an asset. When the bank fails, your debt is a valuable product. It gets sold to another bank. So your debt doesn't die, it just gets a new stepdad. You owe every penny to a new address. Sorry. So if bankruptcy is this messy, why don't we see it happen every day? Because of the central bank, the Fed. Their job isn't fairness, it's stability. To stop the bleeding, the central bank acts as the lender of last resort. They inject unlimited liquidity, basically a fire hose of cash, to save the bank from formal bankruptcy. They print money to save the system, which ironically makes your money worth less through inflation. But hey, at least the ATM works.
But why do they care so much? Why not just let the bad banks die? Because banking runs on trust. If Bank A collapses, you stop trusting Bank B. You panic. You rush to withdraw your cash. And what do you do with it? You don't just hold it. You buy gold. You buy land. You buy, canned beans. This causes a domino effect. Banks can't recall their loans. Remember Dave's Tesla? Fast enough to pay everyone. So Bank B fails. Then Bank C fails. The entire economy freezes. This is exactly what happened in 2008. I'll have a dedicated video explaining that crisis in much more detail soon, so stay tuned. And here's the dark truth. When the economy collapses, governments fall. Financial instability leads to political instability. That's why a true total bank collapse is almost impossible. The government will print every dollar in existence to stop it before it gets that far. So, what's the lesson here? The system is rigged to survive, but that doesn't mean you are guaranteed to win. Here's my advice. First of all, don't put all your eggs in one basket. If you have more than the insurance limit, spread it out. Next, diversify. Don't just hold cash, own assets like stocks, real estate, or gold. And stay calm. Panic is expensive. Now, if this video gave you enough ammo to go sound smart in front of your boss, your partner, or your best friend, hit that like button. And if you're still confused, watch this video again with your friends and family. If you have any questions or if you're just confused, leave a comment below and let us know. Thanks for watching, and I'll see you in the next